Hey, welcome to the closing beat, everybody. Happy Monday to you. How's it going out there? Everybody have a good weekend? I hope all is well. Welcome back to the stock market, by the way. We are financial advisors here at the Jazz Wealth, and while other advisors are playing checkers, we are playing chess. In particular, upcoming Wine and Wealth, it's going to be with a dear friend of mine, actually. We said, we posed this question to clients. We said, if you had no fear of being sold something, what is one question you would ask about insurance? We're going to actually have them as guest speaker, somebody that knows the ins and outs of all that stuff, your life insurance, long-term care insurance, all that good stuff. What are the tricks? What are the gimmicks there? And what are the sales pitches? He's going to guide all of our clients to that. That'll be coming up. We like doing things like that. But we also like talking about the stock market. And a lot of interesting things happening here, which is cool because it's the start of earnings season as well. So this volatility that you're seeing likely continues, right? And that's good. We like volatility in the stock market. It's better than just having a slow, boring market. So we'll be checking that out. Okay. For the S&P here, war not fully expanding there to include Iran. That's pretty cool. Taylor Swift's movie bringing in about 100 million. All right, that's pretty cool. Everybody's like, let's just buy the stock market. It was a broad rally today, too, which is good because it shows what they call a risk-on approach. You know what risk-on, when they say that on TV, what that means? The concept there is we see a broad S&P rally, but we see a broad rally or decline in rates, right? So when we put those two things together, it's like, okay, people are selling out of their bonds, meaning the price of bonds are declining. The rates are going up, sadly, but the price is going down, and people are broadly buying the S&P. That's a risk-on approach. If it were the other way around, we would say it's risk-off approach. People are, like we saw last week, people didn't want so much to do with the stock market on a daily basis. They wanted to be in the bond market, and so we have prices of bonds going up, which means yields are going down, and the stock market really, not participating, at least in the last couple of days of the week last week. So now you know what that means there. It's especially interesting, I think, when there's no notable news. Why was the broad stock market higher today with really not much to go on? It's just kind of like you wake up and say, well, this is good. Let's start buying the market. So much so that if you look at the best performers today, all but like 2 or 3 of them were really beaten down names. Advanced Auto Parts being the best performer in the S&P. Etsy, the second best performer there, right? You got Warner Brothers moving higher, VF Corp. Look, these are all beaten down stocks, and they got a bid today. That's a good thing. Well, if you own it, it's a good thing, right? You're happy to see it go up. But there were a lot of stocks like that. It's a good thing because it shows a broad market rally. We know that we can't have those top 7 stocks lead us to the promised land forever and ever and ever. We need support from the other 503 stocks that are out there, right? And so when you see a day like today where you go, okay, Charles Schwab, otherwise beaten down stocks. Of course, earnings help these guys out today. That's fine. AES Corp coming off of a bottom there, maybe looking a little bit better. Lincoln Financial. Okay, great. These are all in different areas of the market, all different sectors and industries and everything. And people wanted to buy that. That's not individual people buying stock. That is people just saying, get me in the market. I'll take the whole thing. That's good. That's a good sign. So when we go to the S&P here for the day, technically speaking, like if you like the technical patterns, we're not out of the woods yet. See this prior high here? This could be what's called a lower high. So in other words, we've set a high at some point. We have a lower high. I was unable to get higher than this one here, right? So a lower high. We had another lower high that gained a little momentum. If we reverse that right away, that's a good sign for the bulls, right? Especially if we reverse it in such a way where names like Advanced Auto Part and Etsy and these names that are just kind of out of favor, if they participate, now you go back to the stock market and say, I have broad participation, which seasonally we know to expect kind of anyways, right? We know that October is the more volatile of the months, but we know it tends to end positive. And then November ends a little bit more positive. And then December, right? So it's kind of that, the weather changes, so does the market thing. So that's what you're looking at in the short term. You'd like to see tomorrow just keep going. We got a lot of Fed members speaking tomorrow, maybe some good news about leaving rates high, not going any higher for the moment. That's considered good news at the moment. So you've got things like that. Also, it feels like we're coming to an end of this UAW strike, at least if you follow what Ford says. Ford says look, this is like a way of life now. You notice how many people, like the strikes that are out there, Walgreens pharmacists threatening to walk out there. Of course, the actors got things started off there. You've got Kaiser Permanente, right? Largest insurance company out there. Oh, they're going on strike. They settled it. But, that going on. Of course, the UAW, Ford, Stellantis, General Motors, all a part of that. And so it feels like that part's kind of coming to an end. The Ford CEO's really kind of come out almost with like a political stance and saying, look, it's not Ford versus the UAW. It's Ford and the UAW. It's time to work this out. It's time to come up with a deal. We're not going to put each other down personally. His words. We're just going to get right to work and make this happen. So it feels like both sides now are trying to sell to their boards and to their employees that we've done everything we can. We've fought as hard as we can. This is the best deal. Let's take it for both sides. So I don't know. I could be wrong on that one, but it just kind of, having seen this a few times, just feels like that's where we're going. Okay, you got the NASDAQ. Same thing from a technical standpoint. We have a downtrend here, very, very shallow downtrend. It's, of course, the strongest of the year. It's up darn near 40% for the year. That is not bad. We're not arguing that. But we still have that little technical area there. So everybody that follows that or the algorithms that participate in that, they're just looking for us to go back over this high. 4,100 points year to date on the NASDAQ. That's not a typo. That's not me saying something wrong, as I often do. That's 4,100 points there. Here's the fun part. This is why today was more exciting, too. 10% of the gains, or the points, I should say, come from Apple. About 10% of the points come from NVIDIA, really just when they had earnings there. About 10% of the gains come from Microsoft. Almost 10% come from Meta. About 6% come from Tesla. And the last one, 6% comes from Amazon. Okay, that's fine. That got us to this point. We can't do anything about it, but we need everybody else to chip in. And that's what you saw today. It's a very, very good sign for that. Add that up. You got 10, 20, 30, 40, 52, over half of the gains or the points that you saw, over 22,000 points, come from just those names. All right, that's fine in short spurts, but we can't have that all the time. One index that would like to see more of that would be the Russell. Just barely flirting with year-to-date gains. It's up less than 1% year-to-date thanks to this big old pullback that you see here. Broad weakness, but today, broad buying, broad strength. People wanted to be a part of the whole index, not just a little biotech sector, not just a little small cap tech sector. No, they want to be a part of the whole thing. So that's a really good sign there. Looking around, gold coming back off of some of its rally from last week. Very impressive rally last week. Let's go to oil. There you go. Not much to go on here. Remember, there's these days where oil's like, no escalation over there, it's fine. Then there's the other days where Iran chips in with their comments there, and we go, whoa. Let's just hold on a second, see what's going on. So expect that to continue to be a very volatile area there. Okay, we talked about the bonds a minute ago. Let me expand on this a little bit. So rates on the rise again, and prices go down, rates are going up there. Last week, I shared this with you. There you go. We talked about the pullback from all-time highs, and I used ETFs so that you could play along as well. We used gold, we used the sort of aggregate of all bonds, we used the TLT, and we used the S&P. Just to give you an idea, the black line there being the TLT, or bonds, right, the long-term bonds. Sharpest pullback, look, as far as we can go, ever in the history of the TLT. Sharpest pullback down about 50%. One thing I'd like to add to that this week is bonds almost have been as volatile as stocks. That's not normal, right? So here we're just looking back a little bit, and in the black, we're showing the stock market, in the green, we're showing bonds, right? Aside from this little window right here, first part of 2022, as we get into the summertime and kind of crawled out of the summertime, that's the only time that the stock market was more volatile than bonds. What we're showing is volatility. I'm not showing price or anything. This is just volatility. Other than that, look how correlated the volatility to the stock market was and is. In other words, all the people that say, man, I'm just going to go buy me a bond and just, ride it out, man, make my 4.9%, be on my way and just be happy with it. First of all, the real yield is not 4.9, right? So keep that in mind. 4.9, you see it on the screen. Ah, that's exciting. And I get a discount. Cool. What's the real yield? It's about 1%. It's getting better, but it's about 1%. However, you think, this is great. I'll just go buy bonds and do my thing. You better be willing to accept that volatility or be willing to hold to maturity. Holding to maturity doesn't, then it doesn't matter to you, essentially, the volatility, but you'll still see that price change in your account. A lot of people don't factor that in. They say, I'm going to buy a bond, and they just expect to see that 4.9%. That's fine, but you own it at a price. That's like buying a dividend stock, right? Bad example, but you buy a dividend stock and you go, oh, they're paying 5% in dividends. Okay, but the price of the stock can go up or down 50%, right? You still have to be able to sort of sweat that if you can there. All right, moving on. Not a whole lot else to mention here today. It's earnings season, so there's just over 200 names that will report earnings. 53 of them will be in the S&P. Schwab got us kicked off here today. There's a ton more coming up, so just a heads up with that. We will cover them as they happen. A couple stocks in the news. Disney finally recovering here a little bit, breaking through the 50-day moving average and breaking. By the way, that one got bought up today too, right? So an otherwise weak stock that was getting bought up. Index level buying, so now we know what that is. But breaking through that prior high right there, so showing just a little bit of extra strength. I happened to get to visit Magic Kingdom, Epcot, and Hollywood Studios last week, and I don't know. I think there's a little work to be done there. I'm just going to throw that out there. I don't know, Cody, you want to chime in on that? I don't know how you feel.
It's their parks department is,
I think there's a little work to be done there. Yeah, it was a very, very confusing experience with the Genie Plus and what that gave you access to, lightning lanes and being able to purchase individual lightning lanes, the lightning lanes that you could book every hour, the ability to hop to a different park, but you couldn't book the next Genie Plus lightning lane until you were in the park. However, you couldn't get into the park until an hour after everybody else was already in the park, got to book the lightning lanes. So therefore, you don't really get a choice. Very confusing. And not to mention Hollywood Studios. Bit dirty.
Oh,
yeah, I'm gonna throw that out there. It wasn't special as it used to be. You just noticed my feet sticking on the ground a little bit. I was there early. I think we need to hit a pressure washer to that thing, clean things up.
Oh, kind of some harsh words from you.
Those are tough words. Those are tough. I felt bad saying it, and I wanted to feel the magic, but I was like,
Back in my day, we used to just get in line and wait for the rides.
You can do that.
Oh,
you can still do that for all but like the Guardians of the Galaxy. But I'm just saying, this is just a little weird. And then the people you ask questions to, they got like blue hair, pink sunglasses.
What's wrong with that?
Nope, they just dressing up weird. Not the way Walt would have had it, right? You fit the character. You don't fit yourself. You're here to be a part of the magic and the movie. You're not supposed to be your own person. Yeah. But they had attitudes. A lot of people with the attitudes there.
Gosh.
Supposed to be the happiest place on earth. So not the best there. I'll use a quote from Walt Disney. It said, the difference between winning and losing is just not quitting. I feel like there was a little quitting going on there. Yeah. I don't know. I mean, I love when the love is there, and then I hate, and push when people need to address it.
Yeah.
Just saying.
Just call it like it is. All right.
Yeah, I'm just putting it out there. I think maybe a strongly worded email to the people there might do the trick. All right, I'm just messing with you. Apple. So Bloomberg said overseas in China, the Apple iPhone sales are rather disappointing. I did not follow up with that one, so I can't expand on that further. Rite Aid, you may have noticed not much of any action going on here today. They officially filed for Chapter 11. That was no shock there. We talked about that early last week. Charles Schwab, it's kind of interesting. Sales were about the same, but they made more. That's a good sign. And it wasn't the best of earnings if you break it down by category there. What I found interesting is overall deposits were a little bit higher. Not higher than expected, but they were a little bit higher. Okay, that shows trust. Remember when people were fearful? They're going to go bankrupt and all. It's this thing right here. Remember when that was a thing? So a little bit higher deposit, I think is a good sign for them. Maybe something that hopefully will continue for them. And they're also starting to bleed off the costs of the TD Ameritrade acquisition, something I've been following kind of closely there because I have a lot of friends that work for TD. So that's starting to become something that, well, hopefully now they can start making money from. A little bit of a transition there. Okay, tomorrow we have Bank of America, Goldman Sachs, Johnson & Johnson, Lockheed Martin, Prologis, really cool office they have, by the way, Interactive Brokers, JB Hunt, and United Airlines. We also have 1, 2, 3, 4, 5 people speaking Fed members speaking, tomorrow. So expect a lot of that. Also want to point out, I didn't catch this till just now. Lululemon, you might notice that being, that would have been the best performer in the S&P if it was in the S&P, and it's going to be in the S&P. They're going to take the place of Activision Blizzard, ATVI, which Microsoft finally got that deal done. So Lululemon will be in there, and that takes place in 2 days, actually. So that's that one. All right, I'll take your questions if you have any questions, and otherwise I'll get on out of here. Have you been to Disney lately? And it's been a while. You know, were you impressed? I haven't been there in a while, so going back, I was like, yeah, I'm not sure. Mr. Bishop got a little bit of an accident there, huh? Man, sorry to hear that. I haven't done that in a while, but I did realize I'm also a one-park man. I am not a park hopper anymore, so that's just not something you can, buy a ticket, go from one to the other. That's a lot of work.
It's such a part of getting up there in age. So
I think so.
Oh, okay.
Yeah. Well, because after you're used to during your day, like just let me take a break, let me sit down, whatever.
Yeah.
No, man, 18,000 steps.
Oh, wow.
That's a lot of steps.
It's a lot.
Did we did the Guess the Dow winner?
Oh, we didn't visually do it. It's on the lower third there.
Peter L.
Yeah, Peter L is your Guess the Dow winner. For last week, he won $100. He is not a client, so he's going to get his e-gift card. He had some rude things to say about the Cowboys, so we're still not sure if he's going to get his gift card, but he'll probably. So, yeah, congrats to him.
I don't care because I didn't play Dak Prescott.
Oh,
so
smart man.
I won. I beat,
Yeah, exactly.
I won my week in my little fantasy sports. I'm doing all right. I'm 3-3 now.
Whoa.
I'm back in the game.
Wow.
Yeah. But I think I do have Cowboys defense, actually.
They're going to be just fine.
Oh, they'll be fine. Okay, good. The Schwab app still sucks. Oh, sorry to hear that. I don't think I have the sample one of that one, so I don't know. Yeah. Mozilla. So you're looking over here into an unique exchange traded fund. Now, I'm a little different. This is a little bit new. So for me, I don't want to pick on them because there's nothing wrong with this ETF. You can skip some of the fee by using the most popular ETF. This is kind of like a white label ETF. If you've ever seen, I actually met these guys at the conference that me and Eric went to. If you've ever seen the, what's the brand name of that? The Yield Max ETFs. It's not actually Yield Max. There's a reason why they have to charge so much. There's a company called Tidal on top of it. And I met those guys, real hard sales pitchy guy. Man, they were like car salesman people. Nice guys, but really aggressive. And so what they do is they say, if Dustin, you have an idea for an ETF, we'll just do it for you, get it all registered and everything, handle all the back office stuff, and then put it out there on the market. And you can do your strategy, and we'll just handle everything else for a fee. Right, that's one of them. So your SVOL is another one of those. So I sort of feel like, hey, paying a bunch of people to do work doesn't really need to be doing the work. Go use something else a little bit cheaper. Yeah, I like it. I unfortunately have no other football comments as I can't comment on. Can you comment on any of that?
Yeah, I mean the Packers physically have a team. They're just, they're not much. And the 72 Dolphins, the last team to go undefeated in the regular season and win the Super Bowl, both undefeated teams lost yesterday. So that's why the 72
Dolphins are, yeah, that's right. Okay, I did see that. Okay. Yeah. And other than that, that's all I got.
Yeah. Sports.
Yeah. Sports Minute by Cody.
There you go.
All right, I'm going to wrap it up there. Get on out of the way. A bunch of Fed members speaking tomorrow in earnings, provided that there's no major change in the strikes, there's no major change in the war that's going on, whether it's Ukraine or Israel, then expect that to be the focus. And we'll be around here to talk about it. So enjoy the rest of your day. Thank you so much for watching, and see you then.
Hey, Dustin.
Yeah.
Everything good?
Yeah, I'm good.
Sure, everything's good?
Yeah, man.
I'm fine.
Okay.